Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock. With news this week, all eyes will be on Wednesday's RBNZ Monetary Policy review, and especially the regulator's forecasts, even if no change in the OCR is anticipated. Elsewhere, potential market-moving data might come from the US Fed's release of their minutes of its July meeting, or US retail sales, or US industrial production data updates. Or market movers might come from the Japanese growth and CPI data, or Canadian CPI data, or EU GDP and CPI data, who knows? But more likely from Chinese retail sales or industrial production data. They could be weak. Investors are watching what is unfolding in their economy with growing alarm. Maybe it isn't a ticking time bomb yet, but stresses are building and not being dealt with. China's banks lent $346 billion in new loans in July, the least since November 2009, and well below market expectations of $800 billion. In June this year, loan value was $3 trillion. A year ago, it was $680 billion. So by every measure, the July level is very low. If clients now won't take on more debt, it is something of a watershed moment perhaps, and suggests it will be very hard for Beijing to use its usual levers to overcome the lacklustre economic recovery. Calls for more decisive action are growing more strident. And property developer Country Garden signalled reporting a very large loss soon, maybe as much as $12 billion. In the same period a year ago, it said it made a profit of $440 million. It might be going down, and like its larger rival Evergrande, its fall is causing fury on social media in China. And there are also signs of liquidity problems in the wider funds management industry there. Elsewhere in the region, Singapore cut its economic growth expectations for this year on weak global economy and low demand from key trade partners like China. And across the Pacific, annual producer price inflation in the US rose to 0.8% in July from 0.2% in June. A rise was anticipated, but it was higher than forecasted. Americans seem to be starting to acknowledge the gains being achieved in the battle against inflation. 1st of July, and now the August University of Michigan survey records a significant improvement in sentiment from a year ago. And the US Treasury 10-year yield will start today at 4.16%, a little change from Saturday, and still near its October 2022 highs. And the price of gold will start the week at $1,913 an ounce, and unchanged from Saturday, but they are $28 lower than a week ago. And oil prices a little changed. They're just on $82.50 a barrel in the US, while the international Brent price is up slightly to $86 a barrel. These levels are almost exactly what they were a week ago. And the Kiwi dollar starts today essentially unchanged, at just on 59.8 US cents. But that's its lowest since November 2022. Against the Aussie, we're holding at 92.2 Australian cents. Against the euro, we're marginally firm at 54.7 euro cents. That all means our trade weighted index is still at 68.7 and only 10 basis points firmer than Saturday. A week ago, it was 69.4. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.